They say money talks, but these days it's mostly just screaming in digital payment alerts and late-night fraud warnings. Welcome to your inbox last night, where we help you keep up with what your wallet already knows. Today is February 27, 2025, and we've got a lineup that'll make your transaction history look boring. Gen Z is officially over cash. Are we too? The Credit Card Competition Act is back, but does it stand a chance? A massive credit card data dump on the dark web. How worried should you be? And in whispers from Mr. X, there's something fishy going on in the payments world, and you didn't hear it from us. Let's get into it. Starting as we usually do with popular industry news sources. Gen Z is ditching cash like last season's fashion trends. PRNewswire reports that Gen Z now uses digital payments more than cash or even credit cards. Peer-to-peer apps and contactless payments are taking over, and financial institutions are scrambling to keep up with this generational shift. Speaking of cashless transactions, Highlight Homes is now accepting cryptocurrency for short-term rentals. PRWeb highlights how the company hopes to attract crypto-savvy travelers by expanding payment options for vacation rentals in Virginia. This is just another sign that digital currencies are creeping into everyday transactions. Meanwhile, the fight over credit card fees is back in Congress. Payments Dive reports that Senators Durbin and Marshall have reintroduced the Credit Card Competition Act. Congress says the bill aims to shake up Visa and Mastercard's dominance in card processing, which is funny, of course, because as we payments and fintech geeks know, Visa and Mastercard are card networks. They don't actually do the card processing. But hey, I guess people aren't in the habit of correcting United States senators these days. Am I right? Don't worry. Critics of the bill are saying they're worried this move will hurt smaller banks and negatively impact rewards programs. Something they should be able to get consumers all riled up about. American Express and Alipay are doubling down on China's booming payments market. According to Payments Dive, the partnership is designed to make international transactions easier, strengthening Amex's position in Asia's fast-growing economy. Moving now to what's happening in crypto and Web3. PayPal is bringing stablecoins into mainstream merchant payments. Ledger Insights reports that PayPal is integrating stablecoins for merchant payments and mass payouts. This could push wider crypto adoption in e-commerce, but regulatory hurdles still loom. Well, 1 million stolen credit cards just hit the dark web for free. Forbes reports that hackers have leaked a massive trove of stolen credit card numbers. Experts are warning consumers to check their statements and tighten up fraud protections before it's too late. Turning now to our favorite Substacks. Scene, a fintech networking event, industry insiders exchanging stories. Is fintech hitting a wall? The Financer explores whether fintech's explosive growth is slowing down. Some say a correction is coming, while others argue that innovation is just getting started. And while fintech growth is debated, its gender gap is not improving. Observer highlights that women remain vastly underrepresented in fintech leadership. Progress in closing the gender gap has stalled, and advocates are pushing for stronger diversity initiatives. Well, look at the bright side, ladies. At least B of A, Wells, and Truist are taking this seriously while they dump their DEI programs. So, that was sarcasm, by the way. Let's check in on the AI and FinTech report. Just months after making an enormous investment in OpenAI, Microsoft is scaling back AI data centers. TechCrunch reports that Microsoft is canceling some AI data center leases due to rising costs and shifting AI development priorities. Cloud providers are reassessing how much AI infrastructure they really need. And the DOJ is cracking down on data security. Mondoc reports that the Department of Justice has finalized new security rules for sensitive transactions. Businesses will need to comply with stricter standards to protect national security interests. Well, it's about that time, folks. Let's check in with our very own Fintech super sleuth, Mr. X.
Well, friends, y'all sure have been sending me some good dirt lately. I've got 3 for you today, so saddle up and get ready to ride. Congress ain't great at passing bills, but they sure can pass the buck. Now, folks, if there's one thing we know about Washington, it's that they love a good old-fashioned game of hot potato, especially when it comes to regulating the payments industry. And wouldn't you know it, the Credit Card Competition Act is back in Congress. Like that bad penny you can't seem to get rid of. Now, according to digital transactions, lawmakers are once again pretending like this thing has a fighting chance. But let's be real, Visa and Mastercard have more lobbyists on retainer than a Texas oil tycoon has boots. Every time this thing pops up, you can practically hear the sound of campaign donations rolling in to keep it buried. So, what's the play here? Well, some of these senators are using the bill to grandstand about competition, but behind the scenes, they're just waiting for their favorite payments execs to help them understand why it's a bad idea. My bet, this thing goes nowhere fast, unless, of course, the right people stop getting the right checks in their re-election funds. Ain't democracy grand? Next up, I'll tell you, the feds love a good investigation, unless it's into themselves. Well now, darlings, it looks like our friends over at the Justice Department have finally decided to dust off their magnifying glasses and take a peek at how banks are handling their customer accounts. Law 360 says the DOJ is digging into whether financial institutions have been a little too quick to debank folks they don't like, shutting down accounts, freezing funds, and generally making life miserable for certain customers. Now let's connect some dots here. You with me? This sudden burst of enthusiasm for consumer protection just happens to be coming at a time when multiple banks are under fire for questionable account closures, and those closures, coincidentally, involve customers that some might call politically inconvenient. See the official story. It's all about stopping fraud and ensuring compliance. The real story, well, let's just say, if the feds start looking too closely at who they really pressured banks to cut off, this investigation might get real quiet, real fast. My advice, if you're banking on this probe to actually shake things up, don't hold your breath. The government loves investigations, just not when they lead back to their own front door. And finally, we haven't had one of these in a while. Here's a blind item. A certain fintech unicorn might be getting cold feet. All right, folks, let's play a little guessing game. What do you call it when a company tells employees they can sell some of their stock right before an IPO? Now what if, while that's happening, they're swearing up and down that the old IPO is coming real soon? Some folks might call that a liquidity event. I call it a canary in the coal mine. According to Payments Dive, one of the biggest names in fintech, a company that rhymes with hype, is letting employees cash out some shares privately. Now, why would they do that? Well, could be they're trying to keep talent happy while they stall for time. Or, and this is just speculation, could be they're looking at market conditions and realizing that maybe, just maybe, Wall Street ain't gonna be as kind to their valuation as they once hoped. So, what does this mean? Let's just say, if you were expecting a certain long-awaited IPO to hit this year, you might want to go ahead and push that timeline out a bit, and if you happen to work there, might not be the worst idea to take the money while you can. Okay, Fintech fam, that's the gossip in Fintech and payments for today. Hey folks, keep those tips coming. You know, we're starting to get a real good reputation out there. Until next time, I'm Mr. X.
And that's a wrap for today's Your Inbox Last Night, your one-stop source for all things fintech, payments, and financial drama. If you want more than just the headlines, be sure to subscribe. And for our executive members, today's special access includes 2 opportunities to contribute your expertise to a journalist's research, so check your inbox for details. Creators, we see you. If you're repurposing our content, we've got insider tools just for you. Reach out for access. And as we sign off, don't forget, we don't mean to be cartoonish. We're just drawn that way. Have a good rest of your day. You know where I'll be, snooping around to make sure I've seen everything that was in your inbox last night. Until tomorrow, stay smart, stay sassy, and be optimistic.